I saw an interesting article on CNBC and I wanted to share it with you. More Americans are struggling even as inflation cools. And at first I thought this article was a joke because cooling inflation does not mean that it's cheaper for you to go out and buy things. But then I remembered that most people don't understand what compounding inflation means. This article went on to make two key points. First, that inflation is slowing down, but the prices of things are still high. On average, 61% of Americans report spending more money on groceries and dining out compared to a year ago. And second, to compensate for this high inflation, more Americans are turning to credit cards that they can't afford. Over the last year, roughly 8.9% of credit card balances transitioned into delinquency. But that's really just the beginning of why so many Americans are going broke in 2024. So what I want to do in this video is break up what's going on into 4 parts and dive deep into this. First, talking about why and how the prices of things have been rising. Number 2, while the prices of things have been rising, incomes have not been keeping up with the price growth. Then that leads to number 3, more and more Americans turning to debt, things like credit card debt, to fund their lifestyles while interest rates are a lot higher. And this has led to number 4, some people getting rich. You definitely want to stay for this, that way you can understand how you can build wealth despite the things that are happening in the economy today. So let me start by talking about number 1, what's going on with the price growth of things. And I do want to let you know that on August 14th and 15th, 2024, I'm hosting a live investor summit because, well, on August 15th, 1971, the dollar was taken off of the gold standard. And because of that, money and our economy has changed. So on August 14th and 15th, 2024, I'm going to be going over how money has changed and how you can find new economic and investment opportunities in this changing economy. So if you'd like to join me on this free workshop, I got the link to how you can join down in the description below. Let me start by explaining what cooling inflation means by talking about compounding inflation, because according to the United States Inflation Calculator, between 2019 and 2024, we have seen a reported 22.8% inflation, meaning on average, the price of things have grown by 22.8%, and this is just the reported numbers. Many people have felt that real inflation is a lot higher than that, but let's explain how inflation compounds. If we assume that back in 2019, one side of extra guac cost just $1, then what we had happen in 2019 was 1.8% reported inflation, meaning the price of guac rose by 1.8%. Now, instead of just $1, it's almost $1.2. Then, in 2020, the price of guac would have risen by another 1.2%. So now the price of guac just grew again. Then, in 2021, the price of guac would have grown by 4.7%. Faster growth. 2022, it grew by 8.3%. Faster growth. 2023 grew by 3.4%. Less aggressive growth, but it's still growing in price. And then we saw some more inflation in 2024, which then adds up to 22.8% inflation, which means that $1 guac here now costs you $1.22.8. So essentially $1.23 according to the reported numbers. This is how inflation compounds, because the inflation that we're seeing now is on top of the 2023 inflation, is on top of the 2022 inflation, is on top of the 2021 inflation, on top of the previous year's inflation. Now, the reason why this is so significant is because wages have been growing as well, but they haven't been growing fast enough to keep up with inflation. The median household income in 2019 was reported to be $68,700. In 2024, the estimated household income is expected to be around $78,000. That means the median household income has grown by around 14%, rounding up over these same years. So your guacamole grew by almost 23% in cost, but your salary has only grown by around 14% in income. But that still doesn't show you the full picture, because the CPI, this inflation data that you see here, this reported number, doesn't actually give you the real inflation that many people are feeling, because the number one biggest cost for the average American is housing. And housing costs have grown by 40 to 50% over these 5 years. Not to mention that your grocery costs, your car costs, and the necessities that many people need have grown significantly faster than the reported inflation, while incomes for many people didn't even keep up with this 14% number, because some people weren't seeing the big raises if you weren't switching jobs and if you weren't being very aggressive here. And today you have a lot of people talking about how incomes are growing faster than inflation, talking about how this is great news, but it doesn't show you the full picture. Let me demonstrate. The yellow line here shows inflation, the blue line shows wage growth. And today you'll see that wage growth is higher than inflation, but a couple of years ago, the inflation numbers were significantly higher than wage growth. So now what we're seeing is that the wage growth that we're seeing happen has still not made up for the big inflation that we've seen over the past number of years. This is that compounding effect that I was talking about, because inflation compounds, but so does wage growth. But what we've been seeing happen is that the compounding inflation has been faster and more aggressive than incomes, which is why even though we have this cooling inflation today, it still doesn't mean that people can go out and buy things. And because so many people were racking up so much debt over the last number of years, now people are starting to face some problems. Between 2020 and the beginning part of 2024, as things got more expensive, people continued to spend more money. How did they spend more money? Some people turned to credit card debt, some people used buy now, pay later, and this created a record amount of debt for Americans. So people continued to spend money even though they didn't have it. But then in the second half of 2024, we started to see Americans start to pull back, because then they started to realize that they're maxing out how much debt they can have. So people finally started to pull back on their spending. But yet over that same period, we also saw some Americans get incredibly rich, because this inflation also helped drive up investment prices. This brings us to what you need to understand today on how you can benefit from the way that this economic system works. Our economic system is broken up into three different types of entities. You have consumers, you have investors, and you have entrepreneurs. Consumers are everybody. Rich people, middle class people, poor people. Every single person is a consumer, because everybody's got to eat, everybody needs clothes, everybody spends money. Some people are investors, some people are entrepreneurs, the business creators. The problem is most Americans are only consumers. When you have inflation, and we've had inflation even before the pandemic. Inflation is not a new concept. This has been happening for decades, especially after 1971 when the dollar was taken off the gold standard. But we've seen inflation for many decades. People really just started paying attention after the pandemic when inflation got out of hand. But inflation hurts consumers, because inflation means that when you go to a business, you have to now spend more money. And most people are only consumers. Well, wages don't keep up with inflation. So for the average person, you have to spend more and more money at the business in order to buy the stuff that you want. Whether it's groceries, whether it's food, whether it's a car, whether it's your Gucci, whether it's whatever you want. You got to spend more money to buy that stuff. Who does that benefit? Well, that means more money is going to the entrepreneur, and that also means more money is going into the hands of the investor. This is where, if you want to win in this economic system, you got to understand that you got to stop being just a consumer, and you got to at least become an investor, because our economic system is designed to make investors rich, because most people are only consumers. But if you want to build wealth in this economic system, you have to become an investor as well. And this is where you have a lot of criticism on this, where people will say, well, what if the stock market crashes? What if the economy goes into a recession? What if all these bad things happen? And the reality is that will happen. We will see an economic crash. We will see a recession. We will see a market crash. We've seen a recession pretty much every decade for the last century. In fact, the longest period that our economy has gone without a recession was between 2008 and 2020. That was the longest period that the United States economy has gone without a recession over the last century. So yes, we will see more recessions, we will see more market crashes, but despite the downturns that we will see, investors have continued to build more and more wealth. You want to use those downturns as an opportunity to buy even more, but you got to understand, in this economic system, if you want to break out of the rat race, if you want to break out of the matrix, if you want to break out of whatever people like to call it nowadays, if you want to break out of the system of constantly just working to pay your bills, you got to spend less money so you have some more money, take that money and invest it, then work to earn some more money so you have more money to invest. It sucks at the time, because that means you got to sacrifice some of your nice things. You got to sacrifice maybe a nice car, some vacations, some eating out, some fancy clothes. But if you can stick with it for a little bit of time, I call it a decade of sacrifice. Well, now what you'll see happen is that these investments will start to pay you a whole new stream of income. And now you have some money coming into your bank account that you don't have to work to earn, because you own the assets that are working to pay you. What are these investments? It could be stocks, it could be real estate, it could be your own business, it could be other people's businesses. You want to invest in the investments that have been proven to build wealth. Now, I like investing for cash flow. I don't want to get into the nitty-gritty of how do you invest your money in this video. I have a ton of videos on my channel where I go over that. I'll also be going over that on my workshop. But the whole idea here is, if you want to break out of this system, you got to stop thinking like a consumer, and you got to start thinking like a producer and an investor, because that's where economic system is designed to benefit. Your credit score is not a measure of how much money you make, and it's definitely not a measure of how wealthy you're gonna become. Your credit score shows how likely you are to pay back your debt. It's not even that accurate. Oh, did you just cancel a credit card? Well, now your credit score just dropped 45 points. You've only had a credit card for 3 years? Minus 61. You don't have any debt. You have a 0 credit score.